While investor sentiment has been lackluster for the juniors, what about capital from private placement? Well, joining me today at Minds and Money, New York City, is Jorge Ramiro Monroy, powerful name, Managing Director of Emerging Markets Capital, a private placement mining investment firm based in Hong Kong. Welcome to the show, Jorge. Good to have you on.
Thank you. Good to be here.
And you're a keynote speaker here at the conference as well. So let's start with your investment strategy, because some investors and firms here junior mining sector and they run away. They say, it's too volatile. We don't know if these projects will ever take off, but you're attracted to them and your firm is attracted to them. Tell us the story. Why?
Yeah, well, as I was telling you before the interview, we're based in Hong Kong. And, when you're in Hong Kong, you get to understand commodities in a little bit differently. Because when you look at the China story and you look at the growth of the Asian markets in general, the growth of cities, or, the pace of urbanization is still, even though it's slowed down, it's still moving at quite a rapid pace. And so there's a number of very important dynamics happening in Asia in terms of commodities that perhaps Western-based investors are not necessarily looking at. One of them is, the fact that China, mining in China is basically coming to an end. And the reason this is the case is because the Chinese government doesn't want, it's really trying to curb down in pollution. So they put very strict rules to prevent Chinese mining companies from developing their resources. So as a result, a lot of these companies are looking overseas, and this is very significant. The impact hasn't fully developed, but I do think there is a wave of Chinese overseas investment coming, both to the junior and just to the overall mining market, mid-tier, senior producers. And then, if you think about it on the supply-demand side. China at the moment is the number one producer of gold, is one of the top producers of copper, zinc, almost every commodity. So that should have an impact as well.
So Jorge, let me ask you, why do the Chinese get it versus the North American, especially the New York market, not so much when we're talking juniors? Is it because it's a more gold-focused culture?
Yeah, there's a number of issues. I think in the U.S., the strength of the U.S. market has been such that people don't think of commodities as something they need in their daily lives. People in the West, think of commodities more as security, an asset class that they can, when the prices go up, they invest. When prices go down, they sell. In Asia and in China, it's really interesting when I'm traveling in China and you pick up the newspaper. Every day there's some news about iron ore production is down, in the front page, because when you travel around China, I live in Hong Kong now for 13 years. There's a city next to Hong Kong called Shenzhen. Even when I was there 15 years ago, it was you can't believe the development that's happened there. And then if you think about the amount of skyscrapers that are getting built, the amount of copper, zinc that you need. And then in another way, talking about precious metals, people in Asia actually buy precious metals as a way of saving money.
So the thought process is the reasons for buying are different.
Absolutely.
Jorge, let me ask you, I had one mining exec come on recently who said it was much easier to raise capital 10 years ago for the space than it is today. How tough is it?
Yeah, no, it's very tough. It's really, really tough. And I think when it's become, I think, there's a number of issues. Of course, for North American issuers who are, reaching out to North American, European investors, they're facing that a lot of that risk capital in the junior sector is getting absorbed with, medical, cannabis, technology, and but there is capital still available. It's just that it's from more unconventional sources.
But this could cause an issue when we're talking about future gold production and peak gold. If we're not investing in the junior mining space.
That process is very much in play. And it's, we've all sort of, as investors in the space, we're all waiting for the time where that scenario, really unfolds. When there's a...
How far away are we from that?
We're in it already. And it's just a matter of time. But, the trick is that it could still be years before there's a break in the system. You already saw it with palladium this year, where, actual physical constraint, made prices shoot up. Silver is looking like it could have something similar. And again, going back to what I was talking about, China, I think what's happening there is significant as well, because there could be potential disruptions of supply as a result of mine closures and lack of development and exploration in China.
Some, as you brought up the crypto space, cannabis, and some people, when talking the junior mining space, compare it to Bitcoin in terms of, the volatility, the speculative investment that it is. Do you think the risk-return profile will be higher in the future for juniors?
I don't know. It's, you keep, intuitively you would think, it's you're in a moment where. Let me just put it this way. A couple of months ago, you thought like, wow, there's a perfect time to get into some of these junior stocks. You couldn't get any lower, and then you buy the stock, and then 2 months later, it's 30-40% down from where you thought it was the bottom. So it's really, really tough to tell at the moment. I think for us, we're focusing on assets that are not in a public vehicle, so assets that are private and are not marked to market. Because it seems like the most reasonable thing to do in this moment of the cycle, where you don't have to be exposed to the volatility of the market.
Well, how big is your firm right now? How many companies are you involved with?
So we have about, at any given time, 10 to 15 names.
Okay.
So we actually have ownership of assets directly. So
where are they primarily based?
So we have some silver assets in Mexico.
Okay.
But everything we do on the equity side is primarily TSX and ASX based.
Okay.
So, 80% TSX, maybe 20% ASX.
Good luck. It's a jungle out there.
Yeah.
Jorge Ramiro Monroy, thank you so much for speaking with us
Thank
today, and we'll have much more for you on Kitco.com.